Hello and welcome to the Business Standard Banking Show. The second quarter was kind of a turnaround for South Indian Bank with loan growth picking up, net interest margin hitting 30-quarter high with a sharp moderation in slippages. Murali Ramakrishnan, Managing Director and CEO of South Indian Bank is with us today to tell us about the roadmap of the bank. Mr. Ramakrishnan, welcome to the show.
Thank you, sir. Thank you.
After two very difficult years, the second quarter numbers are heartening for the banks. Do you expect the current financial year to be a normal one, or there are some headwinds you see down the line?
Normal year, in a sense that it's a normal year compared to last 2 years, what we had experienced as COVID for the entire banking system. But then having said that, I think still we are in the face of a little bit of abnormality because of the war going on and its impact on inflation across the world, including India, because of which there are changes which have been brought in by our central bank and by continuously revising the repo rates. To that extent, you are seeing a lot of turbulence in the way the reference rates are moving up, which would mean that we need to constantly reprice our both assets and liabilities, and we need to manage the spreads and the slippages, etc., suitably. Because as you know, when the repo rates keep going up, the reference rates keep going up, the end rate for the customer will also keep going up. So to that extent, the customer would start feeling that he has to pay more for the same level of loans. And on the other side, the liability holders, people who hold deposits, they might feel that with inflation hitting them, they may not be able to earn real income. So we need to keep revising the liability rate. So how we actually manage these two, and how we ensure that banks like ours, which have a legacy issue to be still sorted out, which we are continuously doing, how these things will be managed is something which we need to keep doing continuously.
Now, coming to the stressed asset portfolio, what is the stress you see in the restructured book, that is assets which are in the SMA2 category? I'm trying to understand what is the percentage you expect to slip from the restructured book.
Yeah, we have a restructured book. In all, we have close to 2,000 crores now. 1,197 crores is the kind of restructured book which we have. And this restructuring book has come from various types of restructuring which we were doing as a bank in the last many years. If you look at it, Kerala specifically had 2 years of consecutive floods where the government permitted a flood restructuring. Then we had this SME restructuring, MSME restructuring due to GST, etc. That is something which was there. And then COVID hit the entire banking system, because of which ECLGS was given, both COVID 1, COVID 2. There are many schemes which were floated by the central bank, basically to keep funding the small and medium companies, because they are the ones who were majorly hit due to the business model going in for a toss due to COVID situation. So if we were to combine all of this, our restructuring book, which used to be in excess of 3,000 crores, have been continuously coming down. It is now close to 2,000 crores, 1,197 crores, from which, as I keep giving guidance on this, I expect a kind of 25% kind of slippages. This book was 2,400 crores when we started, when we looked at June, and I had given a guidance of 600 crores slippages to be happening from a restructured book, and 1,000 crores of slippages happening from a regular book, with which I was giving a guidance of 1,600 crores of slippages for the full year. I'm happy to say that we are still holding on to the same guidance.
Now, the other issue is the bank's strategy from 2015 was to focus on MSME and retail sectors and avoid corporate loans. But last 1 year, if you see incrementally, the corporate loan book has grown higher, mainly maybe because of COVID and the stress in the SME sector. But when do you expect the more diversification of the loan portfolio to happen going ahead?
Yeah, no, diversification is frankly, it's been happening. That's the reason why we are actually seeing these slippages also coming down dramatically. Diversification, when you say in retail and SME, these businesses, if you were to really build up these businesses, it takes a lot of efforts, because retail, as you know, each business has its own nuances, and we need to have the structures in place to carry out these businesses and to get scale. And we are already seeing a reasonable amount of scale happening in PL, in credit card, in vehicle loan. Home loan is where we still need to get our act fully in place. SME, due to COVID, there are many business models which got disrupted during COVID period. So we are continuing to be very cautious in growing our SME book. But having said that, now I am hitting a run rate of, let's say, 400, 450, 500 crores kind of numbers month on month in SME. And the new book is holding pretty much quite well from October 20 onwards, whatever we have built. And there again, we have built a credit model using McKinsey to underwrite our lower end of SME. So with the credit model in place, with the teams in place, and with the platform which we are going to be commissioning sometime in the last quarter of this year and maybe first quarter of next year, we will have a platform also where we can completely digitize the entire SME business. So we are setting up these businesses for really scaling up to a large extent. But as I'm talking to you, it has clearly grown from the levels of 100 crores, 150 crores kind of disbursement per month to something like 500, 600 crores of disbursement per month. That's the kind of growth which you have seen in SME. Corporate, the reason why we are continuing to chase corporate is that we are actually completely adopting a strategy where we said that we will be sourcing only high quality corporates, because I had a very less headroom in terms of my delinquency. Therefore, we were onboarding A rated and above kind of corporate customers. There we were able to get good traction also because of COVID. We had surplus lying with us. So with that surplus, we were able to pitch in with this well-rated corporates and to get their initial entry. And now with the entry having got in, we are now doing more and more transactions with them, deals with them. We are doing now medium term and long term. So I would say that growth is there across all segments. But yes, right. The proportion of corporate at this juncture is definitely much higher than compared to other lines of businesses.
But what is the proportion of corporate loans, total loans now? And where do you see it by let's say end of the financial year?
Currently, it is at about 30% of my total book. See, there are many banks whose corporate book is close to 40%, 45%, even 50%. So I am not in a tearing hurry to really say that it is high or that we need to worry about. So long as good quality corporates are available and it is meeting with my NIM requirement and ROC requirement and ROA requirement, I'll be happy to deal with them.
Your results were the numbers are very healthy, but there are one or two challenges, if I can say so. One is deposit growth, which is low single digit. I know there was a lot of shedding of bulk deposits, but going ahead, what is your target? What is your strategy to mobilize more deposits?
Yeah, it's a good question. I think we need to clearly work on two things here. One is how sensibly are we raising our deposits? How sensibly are we managing the liquidity, which is one of the critical things which we should manage, and how we can continue to bring down the overall cost of funds, which means that I need to work on my CASA. So term deposit is one component, CASA is one component, and your liquidity is another third component, which all of this will have to be balanced. And when I say liability, I'm not only talking about domestic liability, I'm also talking about international liability, because we raise a lot of NR deposits in NR CASA. So even within CASA, for example, there are 4 different streams which gives you CASA. So NR is one, and task is one, government business is one, and retail is one. So how do we actually mix all of this so that your overall CASA keeps going up, which currently it is at about 34.5%, which how you work on this to take it to 36% kind of level, at least in the next 2 to 3 quarters, so that your overall push comes down, and how you can effectively reprice your liability book by very closely looking at your elasticity in each of these bands which you're talking about, and which is the most widely sought after band for our bank. See, currently we used to be at a CD ratio of something like 66, 67% at one point in time. Now we are close to 75%. So I'll be comfortable at about 74 to 75% kind of level. So we will calibrate our deposit growth in tune with our asset growth.
So what is the overall deposit growth and credit growth target you have for the current financial year?
See, I am looking at a double-digit growth for my assets book. So I am looking at adding. We ended last year with a 61,000 crore kind of book, and which we ended in June quarter at about 64,500 crores. We ended September quarter at about 67,800 crores. I am looking at close to, let's say, 71,000 crores is what I'm aspirationally looking at by the end of this year. I'll continue to work on CD ratio of something like 74%, 73-74%. So suitably, we will raise our deposit base. So I'm not putting a percentage growth over there. Rather, I would work on my cost of deposits as a criteria, and my CD ratio as a criteria, and my CASA as a criteria.
I'm coming to the cost of deposit part, because you said your net interest margin was a 30-quarter high at 3.2%, but your overall target for the year is 3%, which means there could be some deposit rate hikes going ahead, which could eat into your margin.
We have already done that, sir. We have already done a little bit of increase in rates in the bands where we want to bring some traction. We have done that even in our FCNR deposits. So rates have been revised, and that is a continuous process. I am holding 2 to 3 alcos every month to continuously look at where we need to intervene and tweak the prices.
2 to 3 alcos every month. Earlier, I think there was only one alco, but now the situation has changed so much.
Yes, yes,
One has
yes.
to have 2 to 3 alcos every month. That's very interesting.
Correct.
That's very interesting. Now, finally, we would ask you that your capital adequacy ratio is at 16% at the end of September, which is much above the regulatory requirement. Given the loan growth that you would expect, do you think there is a need to raise capital in the current financial year?
Yeah, I think if we are continuing to target growth of double digit, I think I'm sure we need to carefully look at what kind of profits are we going to generate in the next 2 quarters and how our capital adequacy, we need to do a planning of how our capital adequacy will look with the same trend of, restructuring my overall portfolio composition, which will help me to sort of predict what would be my CRAR, etc. So I would definitely anticipate that we may have to raise capital. Any sensible bank, when it is targeting double-digit growth, we need to keep raising capital. We need to equip ourselves with the good capital so that capital adequacy is one of the important parameters for a bank's strength. So certainly, we are very closely looking at the opportunity as to what timing and how much quantum and through what route we would want to raise. I've already got an in-principle approval from AGM as well as board, raise 2,000 crores of equity. So we don't need to really do any work over there. It's just a question of when and how much and through what route.
Okay. On that note, thank you, Mr. Ramakrishnan, for speaking to Business Standard. It was a pleasure talking to you, sir.
Same here, sir. Thank you so much, and thanks for taking your time out. Thank you so much.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.
I am the blue of the limitless sky. I am the inspiration that led success soar high. I will achieve, I will fly high. I am the I in SBI.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.